Alright, so if you've come across this video, you are looking at a way to save money on your auto loan and probably trying to save money in many different other areas. But anyway, we're going to look at this on your auto loan. One way to save money on it is to reduce the amount of interest that you end up paying over the course of the term. Of course, you always want to try to negotiate your interest. If you go to a car dealership and you go through their finance department, chances are, if you don't know what you're doing, or if you show the finance manager that you don't know what you're doing, you're probably going to be stuck with a higher interest rate than what you could actually get if you went and talked to the bank yourself. Now, on some occasions, the finance manager may be honest with you on the interest part. I'm not saying he's going to be honest with you on every part. But yet, then again, at the same time, I'm not saying they're liars because I don't know. I'm not a finance manager at a car dealership, but I do know that they get paid for what they do, so they're going to try to find a way to stick more to you somehow, somewhere. But anyway, to save money on the loan that you have. In this example, I'm going to say this person went and got a loan for $18,000 at an interest of 3.25%. The way that you save money on your interest is, of course, by making larger payments. Now, for this example, first off, I'm not going to have larger payments. I'm just going to show how to save money still paying the same payment that is required per month. Now, this person, we're going to say, got the loan on January 1st. January 1st is not a business day, so probably not actually going to happen. But just for the sake of the example, we're going to say that he did, or she did, whichever one you want to call it. So this person got the loan of $18,000. Now, the interest that is applied to your loan adds up every day. Now, it doesn't actually, I guess you could say, hard post to your balance until the end of the month. But at any point in the time, whenever you make a payment, it's going to affect the balance, which is going to affect the per diem. So the rate that it accrues is going to be based on whatever the balance is at any given time. So we're going to say this person, $18,000. The way to figure the per diem is you take your interest rate, which in decimal form is 0.0325 divided by 365. That will give you, well, to get it out of a scientific number, we'll change it to decimal, add some zeros, and of course we could probably go on and on and on. Oh, where is it? It stops. All right, so that is the daily interest that is charged. Now, how you can use that to figure your per diem is you'll take your balance, whatever your balance is. Oh, don't just take your balance. Take your balance and multiply it times that interest rate right there, which would give you the daily per diem that will be charged to your account, or the amount of interest that you are having to pay per day for your loan. And then that's going to add into your loan. And so $1.60.3 is going to be added to this loan every single day. And for the month of January, there's 31 days in it. So that $1.60.3 times 31 days equals 49.68. And that is added to the balance of the loan. And when this person makes a payment of $325.44, that $49.68 comes out of that $325.44 right off the top. So you can see right here that, let's see how much that is. $325.44 minus 49.68. only $275.80 is actually applied to the loan. And of course, that gives you a new balance starting for the next month. And of course, for February, it's only 28 days. Then, of course, you got the leap years that has an extra day in it. But anyway, for this example, we're doing 28 days. And so you see that the per diem right here is less than what it was in January. And that is because the principal is less. And to show that, we'll take our interest divided by 365, then multiply it times our principal. Now this right here is the exact same thing that I just showed you using two cells in the spreadsheet. I just got the whole math equation put together in one format. And you can see $1.578. Now, again, that's going to add up per day to the balance. They're going to make the payment, and the payments, or the ended balance, is going to be reduced based on how much principal actually gets to be applied to the balance. And that goes on month after month, month after month. And if you notice, whenever you make your payments on your vehicle, I know on the website that I make my payment for my vehicle, it shows me how much interest I pay and how much principal I pay. And so whether if you go to the bank and make it in person or you do it online, I think most places actually break that up so that you can see what you're actually paying. And you'll notice that every single month you're paying less and less interest, and that is why. And so if this person makes the minimum payment or the required payment per month until the very last payment, there's a few extra dollars, so tack it on to the very last payment to get it to a zero balance. The total payments would be $19,546.81 for a total interest of $1,546.81. So that is a scenario, making the payment every single month. Now, if another person took out a loan, same situation, January 1st, same interest rate, but instead of making monthly payments, this person said, you know what, I'm going to make weekly payments. And the way that we got that, the minimum payment or the required payment that we saw on the other screen is $325.44. Divide that by 4. You get $81.36. And that is what this person is going to pay every single week. And what's going to happen every single week, the per diem is going to be reduced because the principal is reduced. And so every single day or every single week, this person is going to start noticing that there's going to be a savings. Now, for this payment right here, of course, they're going to pay more interest, but that's because this person is making 4 payments per month. Some months there's going to be, an extra week. We've got 4 months out of the year that you kind of end up with an extra week. It's not necessarily you have an extra 7 days in the week, but it's just the way that the week falls. You have more business days in it, I guess. And actually what happens is most people that, if you don't have a paycheck that you get paid once a month or bi-monthly, you'll end up with an additional paycheck. If you get paid every week, if you get paid every other week, you'll end up with an extra paycheck 4 months out of the year. Now this person, we'll just say this person gets paid every single week, or either he gets paid one week and his wife gets paid the other week, and it just works out. They both get paid every other week, but their paychecks are on different weeks. So they get a paycheck in the home every single week. But on their budget, they're only doing $81.36 4 times a week. And so on this month right here, instead of making an extra payment when there was an extra week or an extra paycheck, the interest adds up a little bit more, and so that's why there's 14 days there in between their two payments. And so this person pays 4 payments every single week for the term of their loan, and at the end of it, you can see now on this very last one, went ahead and tacked a few extra dollars on to make that a zero balance right there. See, this person paid $19,496.06. Total interest, $1,496.06. Now let's look at the difference in between the two. Total monthly payments on the first example, $19,546.81. By paying it weekly, that person paid $19,496.06. And you can see that the difference in between the two, and it's the exact same amount because of the interest that's saved, is $50.75. That is money that you do not end up giving to the bank. Now, that is not a whole lot of money. You're not going to be able to retire off that. That's just a small tip to help you save money on your auto loan. Now, we can make a little bit of difference here and add up on the savings. What if this person said, you know what, $81.36 is easy. I want to tack a few more dollars on there. We're going to say he tacks on $85. And so that would be a total of $3.64. I'm sure this person is not going to go hungry not having that $3.64 every single week. And so this person is going to increase his payments. I have to delete some of this. Change the final payment to make that a zero balance. And you can see a difference in the amount of payments and the total interest paid. Now let's look at the difference in between the monthly, which is $15.46, and the weekly with a little bit of extra money added to it, $121.86 saved. Now, if you do this, this is an estimation. This is not exact. If you do this and you don't get that exact to the penny savings, don't blame me. This is an estimation, and this is a fairly accurate estimation. And I know that because I used to work at a bank, and that is where I learned this, by paying my own loan every single week, and I saw this in action. So I know it's pretty exciting. Just joking. Okay, so now another way that this person can save money. So this person says, you know what, I get paid once a month, but I want to save money on my auto loan. What can I do? Simple. Add a few more dollars to your payment. So this person's going to go up to $350. See what that difference is. $350 minus $325, $44. So $24.56. Let's look at this. That would equal to about $6 a week. Okay, that was just a little bit extra. Maybe I didn't do that too fast and y'all understood what I was doing. But anyway, and if I'm doing stuff too fast, just make comments, let me know. I'll try to explain it further, because I have a problem. I know what I'm talking about, and if I don't explain it enough, then I might leave something out that I know is a part of it, but I just forget to explain it, to explain why or how something works. And so if you're catching that kind of, well, how did that work? Just ask me. I'll explain. So anyway, all right, so the last payment on this one, after the person added a few more dollars to his loan every single month, because he gets paid once a month. His last payment, $177.91 or 94, and you can see he's saving money too. His total interest is down to $14.27. I should have wrote down. Oh, you see, he's pretty accurate with the guy that paid $85 a week. Let me go back just real quick. Okay. I want to record that. So we can see exactly how much this person saved by doing 350 versus the 325.44. This person saved $118.87 just by adding a few more dollars onto the loan. And not only that, one thing that I forgot to mention is by adding those few more dollars, you saw all those payments that we took off the bottom there? They shortened the term of the loan. And that's another plus on adding a little extra onto your loan, onto your payment. I mean, we cut all these off. Maybe if y'all really like this, maybe I'll do a video later on doing this on a mortgage. My wife and I, we've been living in our house for 7 years. Well, almost 7 years. A couple more months, it'll be 7 years. And not one month have I put more than, I think, $15 extra on our payment. Of course, you know, we are on a budget. Got to be on a budget because we don't make gobs of money. But I haven't put no more than $15 added to our principal every single month. And as of right now, I have reduced the term of our mortgage by, I think it's like 6 or 7 months. Just by putting a few more dollars on it. I think right now I'm putting $9 extra on my principal a month. I'm just rounding it up to a whole number, by fives, that is. And that's it. I mean, it's nothing, you know, I'm not breaking the bank trying to make this payment, trying to, you know, pay it off real quick. As extra money comes available, you know, I'll probably put more on it, but I've got other liabilities that I've got to take care of first. So you can see how just adding a few more dollars on every single payment will end up saving you money in the long run. Of course, you know, like I said, doing $350, $85 a week is about the same. But if you make the normal payment that's required every single month, you're going to pay a couple $100 more per month. Not per month, I'm sorry, through the course of the loan. And that's just a quick tip, how to save some extra money on your auto loan. This won't work on your mortgage, or I'm sorry, this one won't work on your mortgage. Weekly payments won't work unless your loan agreement is set up from the beginning of the loan when you signed it to do weekly payments. I'm not exactly sure why they don't allow you to make partial payments on your mortgage. Maybe it's because they know this right here. If people make weekly payments on their mortgage, they'll lose thousands of dollars, because over the course of 30 years, you'll probably end up saving thousands of dollars if you could make partial payments. But on your mortgage note, you can only make the payment that's required, and you can add some principal onto it, which I highly encourage. You know, even if you round it up to the next 5 or to the next 10, just do it, and you'll see savings on your mortgage. So anyway, that's a quick savings tip. Any thoughts, any questions, please let me know, and I'll get back with you as soon as I can. I don't check my email every single day. I don't have my email linked to a smartphone, so it's not with me all the time. It's just when I'm at home and I think about, oh, hey, I'm going to go check my email. So if you send me an email with a question or something and I don't reply to you for a week or so, nothing against you. Just say, oh, he's busy, or he just ain't checked his mail yet. So I'll get back to you. So Anyway, hope you enjoy it. Hope that it helps you. And this thing that I want to do is, through the things that I've learned, I want to be able to help people. So if I was too confusing, just let me know. I'll try to help explain it better. Thanks.